People look at information as it is presented to them, one-dimensionally. They don't read between the lines. They don't understand reality. They simply believe whatever they're told, or they ignore it entirely. Debt is not just between the lender and the borrower. There's an investor too. All of this debt is packaged up and sold off at a profit. As we saw in 2008, derivatives are not exactly safe. Hang on tight. You came here for the truth, so let me unveil that for you. Today I want to talk about the student debt crisis. I want to look at derivatives. I have some interesting information to show you that is not mainstream, that is not understood by the public. So let's get into it right away. 2/3 of employees report regrets about their advanced degrees as Americans question the cost of higher education. You have to understand, you have $1.6 trillion of student debt today. Did that get people where they wanted to be? That's the question I pose. Inflation takes place in many areas you're not calculating. Don't look at the core PCE inflation rate that the Federal Reserve uses. Look at things like tuition that has gone up considerably just over the last 10 and 20 years. Science, technology, engineering, or math majors who are more likely to enjoy higher salaries were least likely to report regrets. And that makes a lot of sense. If you're making a lot of money, you seem to be affluent, you're doing well, you're probably not going to complain about what happened previously. You're going to say that was worth it. However, if somebody went through school, maybe they went 4 years, maybe they went more, and suddenly they're packed with all this debt, they can't find a job, they're going to be upset. They're going to suggest this was not worth it, I made a big mistake. What we have noted here is that over these years, it seems like more and more people are finding themselves in a position where they are unhappy with the decisions that they made. Maybe they went into the wrong field entirely. Maybe they just weren't happy with school at all. Maybe they should have done a trade. Maybe they should have opened their own business. But ultimately, this is something that they don't know, unfortunately, until it's too late. This survey here, of course, as always, it's just a sample size, but this one is considerably larger than most, 248,000 respondents. So this gives us a pretty good idea of how people are feeling. 2/3 of them have regrets when it comes to their advanced degrees. That's a considerable portion. I've heard from so many people over the years who have seen the amount of debt that they hold really pushing them down, keeping them down, and that is truly unfortunate because it's not just the student debt, it goes one level deeper. If they're in student debt, then they'll be in credit card debt, then they get in mortgage debt, and it just compounds. It only gets worse. Many people have been told that their debt will be wiped out, but I just don't see that happening for the majority of people. It just doesn't seem likely. Further along in the article, they talk about major bummers. So they basically break it down. Most satisfied, most regrets, in the middle, so on. Just giving you an idea further. I'm not going to give you everything that's here. If you want to know this information, either pause the video or go to the link in the description. It's very important to note this information. First line, graduates of the class of 2019 have an average student debt load of about $33,000. Now, if you find yourself in a good job as soon as you come out of school, you're going to be able to pay this off. It's going to take a little bit of time. It's going to take a little bit of work, but you'll be able to do so. However, if you find yourself in a low-paying job, maybe it's part-time when you need full-time, maybe you're already out of your parents' house and you are paying the bills, you're paying the rent, you've got all sorts of things that have added up over the years, this $33,000 is going to put a stranglehold around you. With the price of tuition rising so high, ultimately that means that you will have people burdened further in debt. But there's something that's interesting about this debt. It isn't necessarily the school that makes the most profit off of it. It goes one level deeper, and we'll talk about that more in a minute. Just one more quick note right at the bottom here. About 70% of college students are graduating with debt. So the majority of people, they come out of their college and they have debt. The average being about $33,000. You're going to have people with $50,000. You're going to have people with $80,000 and more. But on average, people have $33,000. That is a significant sum. When you're young, when you don't have a full-time job, or maybe you just started, you're going to be earning a lower salary. For a lot of people, this is a very big number. But as they say, follow the money. This article here is talking about the securitization of student loans. The average person who has that debt, they have no idea what this is. They don't have anything to do with it. They pay their debt and they go about their business. But it's going on behind the scenes. The same with your credit card debt, the same with your mortgages. All of this is being packaged up into derivative products, whether you know it or not, and they are sold off to investors. We started to find out about this in the 2008 financial crisis, because as things started to tumble down, we realized what derivative products really were and the dangers that they pose. Student debt is part of this, but the numbers have grown considerably since the financial crisis. Right now, at $1.6 trillion, we've got a lot of money sitting out there that has not been paid back. We have delinquencies, and unfortunately, it's not looking very good. Let's talk more about this. The real action happens in the smaller private student debt market. Here, private lenders like Sallie Mae package private student debt into slabs, as they like to call it. You remember the mortgage-backed securities, in this case, the asset-backed securities for student loans. They charge variable interest rates based on the student's credit eligibility. But if you remember what happened back in 2008, all of these things were rated AAA, things that were garbage, subprime debt. Put them all together, rated AAA. We'll talk more about that also in just a moment. Student debt is refinanced by lending institutions and packaged into asset-backed securities. Then the slabs are cut into segments called tranches. You remember that from 2008. Finally, the tranches are rated by credit agencies and sold to investors. It's a very similar process to mortgage debt securitization with some similar risks. For the purposes of this video, understand they're basically the same situation. You have a person, they've got debt, they package it up, and they sell it off to investors. They're going to give it to their friends at the rating agencies to put a AAA logo on it, and that right there makes it really attractive. However, if they start to default, then you've got a problem. The last thing I wanted to show you here today was this particular instance where they gave these slabs a AAA rating, okay? This happens to be one particular company, I believe it's pronounced SoFi, but I'm just showing you that it's the same thing from 2008. Who knows what's going to happen this time around? I just foresee a lot more individuals becoming delinquent as we rise to the absolute peak of debt that we've ever been in history. There are less and less people who are able to pay it. You can only pay the minimum for so long. If you look at how much you actually pay for a particular item, when you only pay the minimum, it is shocking to see how much debt that people carry. They're carrying thousands of dollars on their credit card, 17% interest and more sometimes, and yet they're only paying the minimum. They will be paying this thing for eternity. With their student loans, we've got a very big issue. All of this is collateralized, it's securitized, and it will be a disaster at some point. That's going to affect all of these financial companies that are intertwined with it, and many people are foolish in believing that the government is going to bail it out. Surely they can do so, but not without an effect on the general market and how everything in 2008 was simply just the tip of the iceberg. We're falling into the same traps over and over again. If you found this video informative, you gotta let me know. In the comment section, please let me know what you're seeing on this channel versus what you're seeing on other channels. I'm trying to cover the data, the information. I'm trying to show you things that are simply not being highlighted. Although I can find it out there in mainstream articles, it doesn't seem like mainstream individuals know about it. That's why I'm trying to package it all up here, bring it into these concise videos. If you appreciate that, please give me a thumbs up. It really does support me and this channel, so I really want to thank all of you for doing that. There are a lot of freaks in the comments section, a lot of people with instabilities mentally, and I just think that we should completely ignore them and we should just be a collective of people that are only interested in the truth. We don't want to be interested in all that garbage, all the psychosis, and all the mental instabilities that are going on. That's just something that we shouldn't be a part of in any way. way. Thank you all for your support in every single way possible. Really, I do appreciate it. If you want the financial education you were not taught in school, these 2 books have everything you need. I cover the foundation, the history, the asset classes. I give you everything from step 1 all the way through. You are going to know everything you need to about the financial system, about money, about how to take care of your actual finances. And if you still want somebody to manage your money for you, you can ask the right questions. That's why these 2 are so important. Look, for $30 between the 2 of these, you're going to know everything that you need to. So I believe they are truly indispensable. But of course, I'm heavily biased. Check out the link in the description if you want the audiobook. That's available at themoneygps.com. Wait a second, hold on. Definitely watch this video. It is very important. Click on it and I will see you there.